Hey everyone, welcome to the KE Report and another daily editorial. This time chatting with Chris Temple. Chris is the editor of the National Investor Newsletter, our go-to source for commentary on not only companies but also what's going on around the world, especially in the US and trade opportunities here. So, with Chris today, we're going to be focusing a little bit more on potential trades in base metals and critical minerals, especially the critical minerals front that seems to have come back more into the spotlight with comments out of the government and potential tariffs from Trump's administration. Is over the last year or two where critical minerals really lost some of their steam and momentum. Is I guess the governments just didn't move that fast to advance some of these projects, and a lot of the money that was set aside it just wasn't being spent. We've seen that change a little bit recently as countries are seemingly getting a little bit worried about what tariffs the US could put on and trying to grow their own domestic production. Chris, what are your thoughts on potentially renewed interest in base metals or critical minerals on the back of all these tariff threats we're hearing about?
Well, Corey, it's a very mixed bag, and you've got to be careful. You've got to be nimble. I reminded folks recently in my newsletter that several weeks before the November election, Howard Lutnick, who at the time was co-chair of Trump's campaign, he's the Commerce Secretary designee. They haven't voted on his confirmation yet, but I don't think he's going to have any trouble. He was interviewed at length by CNBC, and they wanted to kind of take a measure of what Trump's tariff game plan was going to be. And Lutnick said something very important, which he has since gone back on, and the president has certainly gone against himself. But back then, Lutnick said, look, tariffs are going to be used as a negotiating tool. They're going to be used surgically. But one of the things we don't want to do, because this will be a negative economically and a negative for U.S. consumers and prices, is put tariffs on things that we don't really produce here in the U.S. because you don't really solve the problem in doing that. Trump has loved to compare himself to William McKinley. Very selective history, by the way, which would take an entire show and then some to unpackage all of that and remind people of what the history really is. But, William McKinley, to the extent that his tariff policy in the late 1800s made some sense, he did it to protect nascent industries that were being built, meaningfully and economically from cheap foreign competition. And that is one of the reasons why you use tariffs, not just, to raise revenue, not as a punishment against other countries. Well, here's the problem, Corey, is that today, and, the latest news was we're discussing this, is that the president put tariffs across the board on steel and aluminum both, including imports from Canada. The U.S. produces, as with most things, a minority of the share of what we actually use. And there's no prospect anytime real soon that U.S. production is going to come anywhere close to being able to get us up to 100% of our own needs. We're always going to be, for the foreseeable future anyway, importing at least some of what we need from other countries. So, given that, all you accomplish by throwing tariffs on imports is raising everybody's prices. We saw that with the preliminary tariff threats against both Canada and Mexico, which are on ice for the moment, where there's a couple of major utilities and refiners in Atlantic Canada that service the New England states in the U.S. that came right out and said, "Hey, we hate to do this, but our customers in the U.S., our retail customers, your utility costs are going to go up." So, the president tried to say during the campaign that, well, the consumers don't pay tariffs, somebody else does. Well, I don't know who the hell that somebody else does. Maybe it's Claude Rains. But the fact is, consumers do pay the tariffs. They do pay the higher prices. Wholesalers pay the higher prices. And, so this is not going to be a net positive for the economy or our trade policy, either one. But, we really should go down a list one by one or theme by theme, I think, because there are good actionable stories for investors in commodities, but ones that aren't so good.
Well, let's maybe dig into it a little bit further. Let's just sticking with the ones you talked about already that are actually tariffs that are in place on steel and aluminum. A lot of manufacturers in the U.S. have pushed back on that, and it's obviously going to impact in Canada, Quebec, which has, some of the biggest steel and aluminum outsourcing, but also he put tariffs on Canadian oil, the heavy oil. And that obviously affects industry because heavy oil is what we import from Canada in the US at refineries to make diesel. And if we don't have we already have a diesel shortage. If we don't have the trading partner with Canada, or if we do at a higher price, that either raises diesel prices, which raises trucking prices. Though industry is also pushing back on that. Isn't all of this inflationary, which is the opposite of what Trump was trying to achieve?
Well, of course, it's inflationary, Shad, and everybody is pushing back, or people that understand the math are pushing back on President Trump. Look, I try as much as I can to be a patriotic American, but I've always been of the mind that I love my country, but I'm suspicious of my government. Doesn't matter whether you've got Republicans, Democrats, or gerbils in charge. And you've got to look at things for their merits or lack thereof. When President Trump comes out and suggests that, well, Canada doesn't have anything that we need, we can do without it, it's just not patent nonsense for exactly the reason you suggested, Shad, and many other ones. We need that 4.5 million barrels of heavy oil from Western Canada. His idea that Canada is somehow taking advantage of us is just asinine because we buy that oil at a discount. We buy it at a discount, the WCS price, simply because it is a heavier oil. Not everybody can refine it, but we've got refineries mostly in the Midwest that can process that stuff. And it's part of our transportation fuel mix, like you pointed out for diesel. We have no place, nowhere to replace that 4.5 million barrels of oil. The only place that might come close is Venezuela, but Trump's policies are going in the other direction, trying to strangle that country to effect a political change. So this is just, look, this is just not very well thought out. Look, on a big picture scheme, I like a lot of what President Trump is doing. A lot of it is overdue. I think that where all of the graft and grifting that's been going on for decades in our government is being uncovered, I'm enjoying the hell out of seeing all of the perpetrators just screaming bloody murder for being caught with their hands in a cookie jar. All of that stuff is great. But when it comes to a lot of these other things, and I've said this before, and I said it during Trump 1.0, I really think I get the impression sometimes that I'm not listening to the leader of the free world who knows what he's talking about in detail. I think I'm watching an episode of All in the Family, and I'm listening to Archie Bunker and Barney Hefner and the boys down at Kelsey's bar, bending their spleens. And even if they identify a problem correctly, they have no idea how to get out of it.
So, Chris, what's the investment narrative around this then? If these prices will rise for the U.S. consumer, that doesn't necessarily mean that they're going to be buying more of any of these products that might come from these metals or diesel, oil, whatever they might be. So, is there an opportunity to invest in some of these companies on the back end that could be getting permits faster? Because it doesn't seem like cost of capital is going to go down for these companies. So, how do you take advantage of what you're laying out here economically and politically for a portfolio?
Well, this unfortunate thing, Corey, is that the net result of all of this is inevitably going to be that the U.S. starts to dip into recession somewhat. That's going to slow down growth. It's going to cast aspersions throughout the world. Just how robust the economy is going to be if we're going to see trade disputes. That is going to cause some more shortages. Where the shortages are acute, that could keep some prices higher. But I think the net result is going to be negative for economic growth. It's going to be negative for investors that are long in a lot of growth-oriented things, like a lot of commodities. There are a lot of different one-off stories where, in part because of trade issues, in part because of embargoes, you've got some very actionable metals. Part of the consequence of Trump's renewed tariffs, or augmented tariffs, I should say, on China, is that they've added to the list of trade embargoed items for export, one of them being tungsten. There's a few different tungsten plays in North America. A couple of them have already done extraordinarily well. A couple of them are about to. I'm looking at one particular company right now. Antimony is a story that's been around for a while. Same kind of a story, and we're very dependent on imports for that. So there's been a few different antimony stories in North America. So you want to look at things like this where you still have a need for certain commodities, regardless of how badly the economy does. Uranium, I think, is every bit as bullish today at $70 a pound on a spot price as it was when it bottomed under $20 a pound. That's not going to go anywhere. But for a lot of these other metals, you've got to wonder. I mean, I commented before we started recording about copper, giving everybody a little bit of a head fake right now. You've got to be careful of that. I love copper long term, and a lot of us know the story about how the structural deficit of new supply is going to be increasingly felt in the coming years. But this pop that we've had in the copper price, I mean, we were at, near $4 a pound US just a couple of months or so ago, if even that. We hit 470 in the last couple of days before it sold off a little bit today. Most of that was a scramble to tie up some supplies. Premiums, especially versus London in the New York market, went up to the highest level in a long time. One story, I didn't get to flesh all of this out before we get on here. One headline I saw suggested it was a record premium between the CME price in New York and the LME price in London. So this is a one-off kind of a rally that I think is suspect, because if nature takes its course and everybody involved, including President Trump, doesn't back off of what are going to be, again, net economically debilitating tariffs and trade wars, then what you're going to have is a weaker economy, and that's not bullish for copper or for anything else. Interestingly, the oil price recently has acted more of like an economic barometer in that regard than copper has. But I want to get to another thing, Corey, you raised this question, and this is where President Trump needs to be focusing more than on arguably anything else when he's trying to reinvigorate U.S. industry, U.S. supply chains and whatnot, and he isn't. I have said before, and I think when we spoke last, that the most significant, I think, of all of his appointments economically was of North Dakota's Governor Doug Burgum, who has been confirmed now as the Interior Department Secretary. He's also going to oversee the Environmental Protection Agency, the Energy Department, and he's got a seat on Trump's National Security Council. So it shows very strongly that the president, in a broad sense, does understand that for all of our critical metals, base metals, energy, everything all down the line, this is a very important national security and economic issue. That's all good. And it's also all good, everything that is going to be done to get rid of the many multiplied layers of permitting and regulatory headaches and whatnot that have kept us hemmed in and unable to develop our own resources. All of that is good as far as it goes. But, and I had this conversation with a couple legislative aides of a congressman recently, because I'm working on a couple of public policy initiatives. This particular congressman represents the Iron Range in Minnesota, where, as you guys know, of course, and some of our listeners may remember, you've got a couple major development stage base metal projects, copper, nickel, cobalt, platinum group metals, etc., between the North Met and the Twin Metals projects. And you can have all of the permitting headaches out of the way tomorrow, and you still can't develop those, either of them, because for a project in North America where you got first world costs and first world labor, a global nickel price of around 15,000 some odd dollars a ton isn't remotely close to what you need to get project financing and to develop anything. Even copper, even after its run, you're kind of at a marginal price where only the best and highest grade projects are going to get developed. And I'm speaking, of course, in general terms. So there's way more work that needs to be done on a part of the president and his economic team to make things in America economically viable when global pricing is against you. And unless you figure out how to do that as well, then all you're doing is aggravating the problem where cost is concerned by throwing tariffs on imports without addressing what would help us as a country. And Canada's in the same boat exactly on all of these issues, without addressing what's going to help us get out from under it and, drive our own bus.
Yeah, some great points, Chris. They really need to do more to expedite the process of making the process not just less red tape, less regulation, but also find ways to encourage the best deposits to have a better cost point, or else they're not coming out of the ground anyways. I want to dial in on the strategic metals, though, and the critical minerals, like we talked about at the onset. You mentioned both antimony and tungsten, and we've seen investors flock into those names. Just throwing out a couple names, if you look at something like Perpetua finally getting its license with the antimony and the gold, it's rocketed higher. Mandalay is a gold producer that also produces antimony. It's screeching higher. And on the tungsten side, you've seen Fireweed Metals and American Tungsten just rip higher because of these critical minerals embargoes from China, kind of a tit for tat with our tariffs and their trade embargoes or their tariffs. Do you think these are short-lived pops, or are there some sustaining trends here that investors can sink their teeth into?
I think they're going to be sustained over time, Shad. I think that, a couple of them might be a little bit overbought potentially. But look, I think that those are great themes going forward. They're more acute examples of where pricing is such, arguably, that unlike nickel, certainly unlike lithium, you've got some of these projects in North America that you can develop and produce economically and make, you can have positive cash flow and make a profit, unlike with nickel and with a lot of the copper projects at current pricing. So, again, it's like I said earlier, you've got to look at these literally on a case by case basis by the commodity and figure out, does the shortage, is it acute enough with that reality reflected at a much higher price now? Are the companies out there like the ones you mentioned and others with those projects, can they be permitted? Can they get funding? And are they going to be economical? And so with some of these one-off stories like those materials, fine, but nickel is going to take a lot higher price. I think the market has bottomed more reliably. Lithium is in the doghouse still indefinitely, unfortunately. Copper, again, I think is suspect if sentiment starts to tilt toward a broader global downturn in economic activity, even though the long-term prognosis is good. No, so that's why I've said for a while that, generally speaking, the base metals, the critical metals, whatever you want to call them, with a few exceptions, I'm very agnostic on. I've liked the precious metals, old energy, meaning oil and natural gas, and uranium. And that's my story, and I'm sticking to it.
Enough said. Thanks for the insights, Chris. And I think that is something that we all need to pay attention to, as well as that just don't be diving into any of these metals or any of these potential stories just because you're reading about it. I feel like investors should have learned their lessons on this just throughout this whole critical minerals saga and all these other metals that get the headlines at some time, and they say, oh, they're just going to catch all the investors' attention, and it always takes longer than investors want. And a lot of the times there just isn't that much follow through too within these individual metals. And you do need to be so metal specific and company specific. Again, Chris Temple, the editor of the National Investor. Click that link in the show notes to keep up to date with Chris. Great chatting with you today.
Hey, take care, guys.